Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Indeed, a pleasure, Jim. Thank you much for inviting me on.
Watching all the trading boards today, the red ink is flowing. The NASDAQ hit the hardest. What's going on?
Well, I have to say, in this rare instance, everybody seems to have gotten it right. You know, just about every technician I know worth his salt was saying a month or 2 months or 3 months earlier that this is it. I mean, we're topping here. And it looks pretty much like we have topped, a major top. My friend Peter Eliades had some good stuff out there around Labor Day that said if you look at the historical charts for Labor Day, it's a pretty good day for a turn. And he got out there also with another chart that had a nice set of parallel channel, and that got the top within a couple of points too. So he and a number of other technicians were right there, and I've been kind of beating the drums myself. And you do that cautiously, kind of looking over your shoulder, because it wouldn't be the first time over the last 12 plus years that I thought, well, this is it. So, but we're certainly, the market is certainly bogging down, and who knows? It could finally, it's never going to get healthy until it gives up all the excesses that we've seen.
Now, was there sufficient warning that we were going to have a drop like this? Because the markets have been pretty wobbly the last few weeks.
Yeah, I would say from a technical standpoint, there were bells ringing. You know, there's that old saying, they don't ring a bell at the top. But this time they kind of did. And it almost seems too obvious that it should adhere within this Evergrande problem. But surprisingly, nobody's fooled by the spin that's being put on Evergrande, which is, Goldman and J.P. Morgan, those guys, they don't, relative to their total asset base, their holdings in Evergrande are small. But the fact is, Evergrande, the tentacles just extend in every direction. And you need to also be cognizant of the fact that that the system is so unstable. There's so many little pieces that in this daisy chain that created a $2+ quadrillion derivatives market that even if a small piece of it should fail, that could be it. So if they somehow manage Evergrande, stage manage it, then to look like we'll maybe survive it, there's still these little things that nobody's looking at that could cause an equally catastrophic result.
Now, Evergrande was telling employees you have to buy shares in us or we won't pay you your bonus. I think it was more likely they were told buy shares in us or we just won't pay you, period, because there have been riots in China, which the government, of course, has kept quiet over these issues.
Well, you look at what China's doing, and they're not completely opaque here. It's interesting. My friend and colleague Charles Hugh Smith had a brilliant piece out the other day. Will Evergreen cause the system to topple? And he answered it in the headline. The answer is yes. China had a couple of options. There was the U.S. method of sort of spinning it and telling fables for the next 6 months or 12 months until we get an even bigger bubble. Or they could just let it happen and chips fall where they may. And it certainly looks like China is going to let Evergrande fail. it's obviously that if you sort of think that calculation through, China certainly knows the potential consequences of Evergrande are such that they could bring the whole global financial system down. On the other hand, they are, as we know, long-range thinkers and planners, and perhaps they may have done this, as Charles suggested, with the calculation that if everything collapses, that they'll emerge from the rubble in better shape than the U.S.
Is that a scary thought?
Well, of course it is. We know how China runs things. I guess the U.S. has gotten sort of closer to it. China censors all news. The government really determines what's put out there as news. And in a way, we have a more pernicious kind of censorship and control of the news here. Well, I don't want to get going in that direction really, but no, we don't really want to live under Chinese rule.
Well, how things are distorted there. Meng Wanzhou, the Huawei executive, released from custody in Canada on an extradition case by the U.S. that was eventually dropped or plea bargained. And she gets off the plane and said, I've suffered for 1,000 days. Well, I'm sure the Chinese people never heard that she was allowed to stay in one of her 2 mansions in Vancouver. She was allowed to go shopping, to go to church if she wanted to. Basically, she had free reign around the entire lower mainland of Vancouver, which is usually ranked about the world's 3rd best city to hang out in. So she really didn't suffer at all. She lived pretty well a regular lifestyle, as opposed to the 2 Michaels, the Canadians held by the Chinese, who were in drafty cells. Who knows what kind of psychological and physical suffering they underwent with the lights on 24 hours a day, being sleep deprived and so on. So, but again, the Chinese media reported that she was suffering in Canadian custody. So that's the kind of spin China likes to put on things.
It's good. Had she she'd been handled like Jeffrey Epstein, she might have hanged herself with a kerchief, but you're right. She was living in pretty good style there while the Huawei thing played out. In the background, really, you have to understand that Huawei, their motherboards really do have these chips that even an engineer, a computer engineer, who knows it's there can't find it.
Yes, Huawei has challenged people to find their spy chip, which means it's integrated into the entire programming structure. And the Chinese have done that before. The control panels for Hercules aircraft made in China had these secretive plans where the wiring itself was acting as the chip. So you're looking for a particular chip, but it was the wiring diagram or program itself that acted as the giant chip.
There was a story early on, this was a couple years ago, I can't remember whether it was a Wall Street Journal story, but it was one of the best investigative pieces that I've ever read about anything. And the story was probably spun with the help of some quasi-official U.S. agency. It was put out there to say, hey, this is not a hypothetical thing that the Chinese are embedding spy chips in every board that they sell, but it talked about how in one particular instance they did find on a Huawei motherboard I won't even call it a chip, but it was a piece of electronics that they described as being no bigger really than the very tip of a sharply sharpened pencil. And this one electrical conduit was capable of transmitting virtually all of the information that was being processed by a giant computer back to the mothership in Beijing or wherever it was. So, as I mentioned, even an engineer who knows what he's looking for can't find these things.
We'll have more with Rick Ackerman right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, Janet Yellen, who's in charge of the U.S. Treasury now, says if they don't do anything legislatively, the U.S. Treasury could be out of cash October 18th. Is this a real or some kind of artificial crisis?
You know, when we speak ad hominem, we speak pejoratively of our Fed chairperson and the Fed governors, we sometimes use the word clown, bunch of clowns. But in this instance, I think it's what she's saying is a pretty good reminder that they really are clowns. We're not speaking metaphorically. We're talking about people with big bulbous noses and huge shoes, and they keep popping out of that car to make stupid pronouncements. You know, the whole idea about the U.S. running out of money. I mean, who does that mean anything to anybody anymore? So anyway, that's what I think.
Well, I was going to say, with the U.S. debt in the trillions of dollars, you ran out of money a long time ago.
Yeah, I know.
Keep going.
There's how do you run out of money when it's there in unlimited quantities? And you know, the other clowns, the ones who sort of take this and run with it in the news media, they're going to look at this mini collapse we're having in the stock market, and they're going to say something like, well, it's because there's fear that the U.S. is going to run out of money, and they wind up being bigger bozos really than the Fed governors.
Brent Oil has topped $80 a barrel. What's going on there?
Little miracle of levitation there. It's not like the whole world, the world economy is burgeoning now. The price mechanism, every price is going higher, but it's only because of shortages. It's been the supply chain globally is so screwed up that's it's not like there's excessive demand driving a huge increase in factory output in China, therefore using up a lot of oil. The levitation of oil prices has just been one of those things that happened simply because it needed to happen. Oil is the major collateral for a lot of that $2+ quadrillion derivatives market. It's energy assets that have been leveraged out so hugely, and so we really need the price of oil to be higher. And like so many other things, the price, the value, asset value, is not being levitated by forces of supply and demand, but by speculative excesses.
We've seen supply shortages now in so many areas. Do you think it's getting to be deliberate? Because the one way for you to get your prices to go up is to tell somebody, sorry, it's going to take weeks or months to get that to you. So if you really want it, we could maybe dig one up somewhere, but it'll cost you twice as much as it normally would. Is this an artificial shortage in some cases?
It's not, but you raise an interesting question there. I think that a lot of we've been in sort of a disinflationary environment for so long, and there's been very little price elasticity. You raise the price, you don't dare raise the price really, because you're going to lose all your business. But now, yes, there's so much Me Tooism there. There are so many operators saying, well, hell, everybody else is pushing prices to the moon. I think I'll do it too. So we do have a lot of that right now. And you go to the grocery store and look at some of these packaged things that you buy, and you'd swear the price has probably doubled in the last year. So there's so much opportunism in that. And I would say it's a matter of the getting's good for these people, because they're going to break a consumer economy, which is not responding with higher wages. You know, the super rich don't care. Gas could be $12 a gallon, and you might pay, $8 for a pack of salami or $20 for salami at the grocery store. But the larger middle class and working stiffs they're very much affected by it. And because wages are not getting pushed up correspondingly, there's going to be a breaking point for all these price increases. And as I keep saying, it will happen. We're going to be deflating like crazy when this bull market is over, which may be now. So none of these price increases are going to stick. Shortages will remain with us, but the price increases won't stick simply because the incomes don't match the increases.
If the shortages stick around, who's going to get hurt the worst?
Everybody. You know, just name it. If you want to buy a surfboard, they're running short on styrofoam blanks. If you want to buy a car, you might pay $20,000 to get a new car, and they're going to give you a November or December delivery time. It doesn't matter what you're buying. And the labor shortage is particularly acute because everything's being sort of run in such a rinky-dink fashion that's what I'm talking about when I say that small business has collapsed. You go out, I was on a long road trip this summer, and I came to Maryland House. It was one of those places where you stop and you get a snack or whatever. And they had, I think, 5 or 6 full facilities there. There was a Wendys, there was a this and a that, and there was only one of them was open. And it was open only because some of the help from one of the other restaurants that had closed that couldn't open were there pitching in and getting paid. But the labor shortage is kind of an oddity because we know there's people out there to do the job, but the government has been so effective in disincentivizing work that nobody wants to work anymore. We know the people are out there to do it, but so many businesses are only partially open now because they can't get the help.
Well, I think some of this is self-inflicted, though, on the businesses where we've heard about Wendys in Ohio closing because all the employees felt they'd been abused by management for years, so why come back to work? Right.
Well, while they're busy, like, hacking and hemming and hawing about all that, you read about McDonald's is on board now for $15 an hour because I guess they had to be. But if you go into a McDonald's store, you see the truth of it, which is that they've eliminated people. They may be talking about $15 an hour, but they cut their workforce back by 60% or whatever. And you go into McDonald's, and if you want to order, in my case, it was a Egg McMuffin, which of course that they weren't serving it because this wasn't one of the McDonald's breakfast all day places. God forbid they should, have a full menu. So they're cutting costs in every way, but the McDonald's is operating with 2 people, and they're sort of catering to the drive-ins, the takeaways, and in order to just get a hamburger at the counter, it takes 15 minutes. You just get in front of this machine, and it's not intuitive enough for someone. I'm computer savvy, but when I look at this screen and it gives me all these wrong cues like add to order, you'd think, well, no, I just want one Egg McMuffin. But add to order means something else. It turns out you have to press that to go, and it says you can add onion, and you can go +1 or +2 or 0 or -1 on the onion, or you can ask for more of this or that. But it took about 50 keystrokes to get my sandwich, and that may be saving McDonald's labor and people who make mistakes at the cash register and all that. But at some point, you begin to miss human interface.
Now, going back to the markets, is this going to be a trend? Is this going to be the winter of our discontent?
Well, the winter has been it's almost too difficult to imagine what's going to come. I mean, the stock market has been the psychological crux, the buttress for this idea that we're somehow getting rich we're all borrowing ourselves rich, and the stock market sort of supports. It doesn't sort of. It supports this grand illusion. So I can't. What's coming, I think, is really it's beyond imagining. I have imagined it in the past, and I try not to put the worst of it out there when I write about it. But there's so many. We're living in an age of folly, really, and a bear market's going to drive home the consequences.
Will gold turn out to be a safe haven?
Not today, it ain't. I made a sarcastic comment in my own chat room with the world possibly falling to pieces right now. Gold was down about 12 or 13 bucks, and I said, well, relatively speaking, that's bullish, a nice safe haven. So gold, I don't think there's not a good reason to avoid gold in an investment portfolio. I've always felt that it's going to hold its value relative to all other classes of assets, in terms of purchasing power. So I've always liked gold. I've never been on board for gold to $5,000 an ounce or whatever, but it's still, I think, going to be just fine relative to anything else you could be hanging on to. So even if gold and silver have a couple of tough year ahead of them, I don't think you'll regret holding on to it. I have my trading partners they've brought in a new method of analysis that suggests that we could see silver decline to $16 or even to $12 an ounce, and that we're not really going to see a good bottom till 2023. So I don't have anything in my own charts to confirm that, but I'm not terribly skeptical either.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim. I hope I haven't, that I don't frighten off some of your listeners.
Well, if the truth frightens people, it's too bad.
Well, we don't always know what the truth is, but I have to say it's time we started making some educated guesses.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, we'll ask it for you if you send it to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.